right, welcome back to the Know Your Numbers REI podcast. Your host, Chris McCormack, CPA, MBA certified tax planner, here with Better Books Accounting, a company that I founded close to 4 years now. And the purpose behind it was to help Americans, entrepreneurs, business owners, real estate investors eliminate the frustrations and the fears that they have around taxes and accounting and the IRS and tax bills and tax deductions and tax credits, the whole 9 yards. Today, we're going to get a little bit more into the story, as we're going to be talking about beating the IRS legally and doing it no matter what level you're at, whether you're a millionaire and making 7-8 figures a year, or getting started, or somewhere in between. I understand that you don't need to be a millionaire to use strategies that will be employed by the millionaires and that surely will save you thousands of dollars in taxes. The reason I am so sure of that is because we've seen people do this regardless of what their income level is, but also because when we started this thing, I was at PwC in Boston, Big Four accounting firm, one of the biggest companies in the world. They do tax and audit and consulting for some of these massive corporations that you and I are all too familiar with, the biggest corporations in the world. PwC is serving them in the capacity of advisor, auditor, tax professional. And so that's where I was. And during that time, I was kind of trying to get a grip on life and see what would come of it all and where I was called to. And part of that was me just studying the business that I was in. And part of studying the business was starting to understand what exactly we were doing. We were looking at these big financial service companies. So the insurance companies that you're familiar with, the banks that you're familiar with, the real estate conglomerates that you're familiar with. These were our clients, and we were doing financial statement review and audits of financial statements, making sure that everything that was in their financials was what actually happened in the business. And then I also served in a tax capacity, helping high net worth real estate investors get their taxes in order and make sure everything was done to the best of their ability. And so in doing that, while I might have served a lower level on some of these teams, I was able to see that the things that they were doing weren't all that complex. Like, it was stuff that could have been brought to everyday Americans, entrepreneurs, business owners, things with insurance and write-offs and banks and investments and all these things to help build a substantial portfolio and grow the company while also mitigating their tax burden. And so with that knowledge and the grace of God, I jumped out on my own and started to build Better Books. And it started out very small as like a bookkeeping firm, but then I quickly realized that the tax department, the tax plan, the tax world had a great need, especially in the real estate space. There was a gap. There was all of these great strategies, and real estate is great for decreasing your taxes. But then when people got to the time taxes rolled around, they didn't see any of that on their return. They were frustrated and concerned that the benefits that real estate claimed to have, or that they read about in things like Rich Dad Poor Dad, or heard about on Bigger Pockets podcast, or saw on YouTube or some conference somewhere, wasn't actually being reflected on their taxes. And so we came in and found ourselves to fill that gap by providing proactive tax advice to investors and entrepreneurs and business owners. And now in my conversations with clients and with prospects and prospects who soon become clients, I have realized that one thing that holds a lot of people back is this idea that you need to be a millionaire to take advantage of tax strategies. People are worried that because they're not at a certain level of income or net worth or profit, that a tax plan isn't right for them, or it doesn't have the same payoff as it would if I had $5 million in the bank and a team of advisors. And so I want to dispel that myth and tell you that the same tactics that are used by millionaires and probably some billionaires, definitely some billionaires, can be used by you on a much smaller scale. We have a client, they're a married couple with kids, and high income earner with some real estate investments. And one of their real estate investments is a multi-million-dollar property that cash flows and generates a large amount of income. And so they came to us last month, and they were just curious and also a little worried about what was going on their taxes. They weren't sure if they could be capitalizing more. They really wanted to lay a foundation. That was how they expressed it to me, because they had goals to grow a real estate portfolio and continue to use the money that God had gifted them to continue to serve people and be a good steward with those resources. And so we sat down, and within sitting down with them and reviewing their taxes, I noticed something. I saw that there was a large value property that was being depreciated over a certain amount of time that to me could have been a lot more efficient and worked much more in their favor, especially in these earlier years. And so we got talking, and by the end of it, I was like, wow, like I think, and I'm confident that you guys are overpaying on taxes because there's a few things over here that you could be doing differently, but this real estate property and the way that you're operating your business, like it really sounds to me that you can write off more in the form of depreciation using a certain strategy that we have, and it will save you $100,000 in year one. And they came to me and they're like, wow, that's interesting. Like, wow, that's awesome. And we told them that we'd be able to do it, gave them the investment, and they hesitated. They were like, well, I don't think we're at that level yet. I don't think we're at the level of a tax plan just yet. Like it all sounds good, but I still think we're just getting started and we have some other stuff to figure out. And I was like, wow, okay. So we're able to get you $100,000 worth of refunds because of the money that you paid in and using what's already in your pocket as a form of tax strategy to decrease those taxes and get a refund back. But you don't think you're at the level of getting $100,000 back? How does that work? And so we got talking, and by the end of it, they started to realize what was actually being presented. Like it doesn't matter what level you're at. If you paid $100,000 in taxes and you have the opportunity to get that back through an investment in the tax plan that's going to save you that much money, then so long as the investment in the tax plan is not $100,000, even $50,000, it makes sense. And even if it was $50,000, it might make sense then, right? Because it's a 2x return. And so our tax plan certainly wasn't $50,000. It was more like $20,000, and they invested in it. And by the time we're done with this return, they'll see the return. And that will be 4 months worth of time that they are able to invest in a tax plan and get a 5x return on investment. There's no other place that you can do that outside of insider trading and having some sort of knowledge behind the closed doors. And so what I want you as the listener to understand is that the strategy we implemented on that client's portfolio, you could see it as a millionaire strategy, right? You could see it as an opportunity to save a lot of money in taxes. And that's a good thing. But if you have this mindset within you that like you're not at that level of saving $100,000, even though you've paid $100,000 more than you need to, then you're going to be stuck. I'm glad that these guys were able to come to terms with the fact that, okay, this does make total sense, right? If I invest $20,000 and 4 months from now, I'm going to get $100,000. That's a no-brainer, right? And so that's what tax planning is. But today, for those of you that might not be investing in tax planning, might just be listening here for the first time, whatever it is, I want you to know that we do need to consider our thoughts a little bit more when it comes to certain service offerings, right? And just because you're not a millionaire or a multimillionaire, or you don't have $1 million of revenue just yet, it doesn't mean that tax planning and strategically thinking about taxes is not for you. So here are 3 things that you should be thinking about when it comes to taxes. 1, we should get rid of the fear that you are doing something that the IRS is not going to approve of. If you're working with a qualified tax professional, somebody who's a certified tax planner, they have their licensing from the American Institute of Certified Tax Planners. You know that they have been through a plethora of seminars, of continuing education, of resources that have got them to that level. If they're a CPA in good standing, which you can look up, it's public information. Go to the state that they're licensed in, look up their name, and see that that's what they truly are. Once you've done that, and you see that, chances are they're the real deal. If they're a CPA and a certified tax planner, not all CPAs are made the same, but if they're telling you that there are strategies that you can, and they're going to walk you step by step on what needs to happen to make sure that those strategies pass the audit, then that's a good sign. If they're just telling you, yeah, they have this strategy, pay them this much, and then you won't hear from them, that's a problem. But if they're lining it up and saying, you need to do this, and you need to do that, and you need to do that, and you need to keep this record, and this receipt, and that receipt, then it's a good sign and something that is there. So when you have like these strategies that might seem a little out there, or they might seem a little advanced for you, or you don't feel like you're at that level yet, well, make sure that you get the confidence that they're going to be there for you and they're going to set you up with the right documentation. The thing is that the IRS and the Internal Revenue Code, which is the tax code, it is this playbook that we're able to operate by. And if something's in there or it's been backed by court cases, tax court cases, then you can take advantage of it. You can confidently say, I'm going to take this deduction because it says right here in code section 469 that I'm able to do this, or code section 250 that I can do this, or code section 179 that I can do this, or so on and so forth. So it starts by making sure that you have the right team in place that's going to document the things or help you document the things, so that when you do take strategies that might seem a little more advanced, or you feel like you're not ready for them yet, but you're taking a leap of faith and getting there, that you have everything in place that needs to be in place, so that if the IRS comes by, if Big Brother comes knocking on the door and says, we need to see this and this and this, you have it and you're able to go on business as usual as you did beforehand. But when it comes to these millionaire strategies, there's 3 that I think everybody should be considering as it relates to your specific tax portfolio. It doesn't matter if you're just getting started or you're $5 million a year and growing to $10 million. These 3 will be applicable to anyone and everyone. All right. The first one is to take every legal tax deduction. Now, these are going to vary between the $5 million business owner and the person that's getting started. $5 million business owner, we're going to be able to do some strategic things as it relates to investing from the business, employee benefits from the business, all that good stuff. That comes at that level that you don't really get when you're just getting started. But the concept is the same. The deductions being the goal. And the fact that they're legal deductions. I'm not just saying anything that's being peddled out there on YouTube or Instagram, saying that you can write off every piece of clothing you buy, or write off all your groceries, or write off all the watches you bought, or write off your gym memberships without the right documentation. I'm saying that legal tax deductions can be taken by any business owner so long as they're documented properly. And that's where working with a tax professional comes in handy. The second one is tax efficient business structures to reduce liability. Now, what the business structure is varies by person to person and goals and income levels and everything else. But there are business structures that are more advantageous for certain income levels and others that are advantageous for certain business areas, right? If I'm in real estate, I might want to go this way. If I'm in cleaning or landscaping or professional services, I might want to go another way. But the idea is that you want to optimize your entity, whatever the business is. And if you're spread across 3 different businesses, you want to make sure that each business is optimized. So your landscaping business has the right entity. Your partnership with 5 other guys investing in real estate passively has the right entity. Your real estate agent business has the right entity. Each one is its own structure that needs to be optimized in order to pay the least amount of taxes. But again, if you're making $5 million or $5, you want to make sure this is locked in. And this is a strategy that the millionaires are going to be using, and Joe Schmo, who just started his business, is going to be using, is thinking about what is the right entity and when is the right entity, or the switch that I need to make to that right entity to make sure that I'm keeping as much money as I can. The business is operating at a level that is right. Taxes are being paid at the level that they need to be. All that comes with business structure and optimizing the business structure to reduce your tax liability. And then the third one is leveraging advanced strategies, like we said, like real estate professional and bonus depreciation. There's a lot of other advanced strategies. The clients that I was referring to, that was kind of their hang up before we were able to get them over the finish line, was like they didn't feel like they were qualified. They didn't feel like they were ready for something that we were walking them through, because they didn't see like, no, this is money that you already paid in. And if we implement this strategy, we can get it back by documenting properly and using the tax code as it is written to help you out. Once you get all the write-offs, you're clear on that. Once you get into the entity structure, now it's about what other strategies can we use, whether it's real estate or any other business. What are some of the advanced strategies that we can use to offset our income, to pay less in tax, to make better use of the money that we're making and saving? This is all part of that third part. And that's exactly what happens at these bigger companies, right? Again, the insurance company, they carved out what's known as captive insurance companies, and basically they self-insured, and they would get a tax deduction paying an insurance company that was their own business. And then that insurance company would then invest the funds. And because it's an insurance company, they're taxed differently. Again, that's the advanced strategy that I'm referring to. Like, that's not for everyone, but they were simply looking at the tax code, using the tax code to their advantage, seeing what deductions they qualified for as this massive billion-dollar business, and just used it. And they also made sure that it was documented properly. Everybody knew what was going on, from the auditors to the people internal to the people that would be coming from the external and asking questions. And so that's what you need to do, is take advantage of deductions, optimize your entity, look to advanced strategies once you reach a certain level, and make sure the whole time that you have a qualified professional that is walking you through step by step. Because if you're just taking this information that I'm giving out on this podcast or on this YouTube, wherever you're listening or watching, it's not going to fly. I am telling you right here, right now, that you need qualified tax advice. You need to be in relationship with a tax advisor, preferably a certified tax planner who knows your situation, knows what's going on, can take advantage for you and point you in the right direction to get you where you want to go. Until next time, God bless you and keep moving forward. Thanks for tuning in.